That's been done. The inspectors have informed me that the necessary quorum of 1,094,419 shares of common stock are present in person or by proxy. Therefore, a vote will be taken on the business before the meeting. The items of business to be acted upon at this meeting, as stated in the proxy statement, is to vote upon the election of 8 directors of the corporation to serve for one-year terms. So at this time, I will entertain a motion to approve the following resolution. Resolved that Johnny Barrett, Craig S. Connor, Joseph B. Dunnigan, Judy R. Gabriel, John P. Lovinger, Stephen J. Madalena, Stephen A. Wells, and Joseph R. Williams be, and hereby are elected to serve as directors of CMB Community Bank Corp. For one-year terms or until the election of their successors. So I would need a motion to approve. Steve Madalena, is there a second?
Second.
Second, Doug Engel. The second proposal before the shareholders of the company is the ratification of the audit committee's selection of Reman Robson LLC as the company's independent registered public accountant firm for the year 2023. The board of directors recommended the ratification of the selection of Reman Robson LLC for that year. This time I will entertain a motion to ratify that. That was Steve?
Support.
Support, John Barrett. Thank you. Since we have a motion and a second on the proposals, we'll now vote to approve and adopt both proposals. Before we do that, is there any shareholder that has not had a chance to vote that's here present? Okay, so everyone's had an opportunity to vote. Then I would like Tim Sullivan to read the certification and report of election. Tim?
Here?
Yeah, come on up here.
Okay.
They want to see you on the video.
Okay. Good afternoon. Present at this meeting, in person or by proxy, are holders of 1,424,172 shares of common stock of the corporation, representing 65.07% of the total votes eligible to be cast, constituting a majority and more than a quorum of the outstanding shares entitled to vote. Signed proxies and ballots have been inspected, and the following is a record of the votes cast in consideration of the election of directors. Of the 1,424,172 shares that were voted, 1,238,956 shares, which equals 86.99% of the quorum, voted to elect the directors as proposed, with the remaining shares abstaining. Of the 1,424,172 shares that were voted, 1,341,573, which equals 94.2% of the quorum, voted to ratify Reman Robson LLC as proposed. Accordingly, the proposals to elect directors as proposed and ratification of Reman Robson LLC as proposed was duly approved by the shareholders. Thank you.
Thank you, Tim. Well, both proposals passed. Congratulations to the board of directors and congratulations to Reman Robson for their continued work with us. I don't know how many years we've had Raymond, but it has been a very good relationship. Would it be 12 to 15?
Yeah.
Yeah. So it's been good. Eric Lawson, our CFO, is now going to put you through a little bit of a slideshow and kind of a recap of 2023.
Thank you, Craig.
All right. So I have some audio equipment here, so I should be able to get this done. Let's see if I'm, all right, good. First of all, let me thank, we have a couple of people that have helped us out today just to get these numbers together, so I appreciate both Abba Reed and Heather Schneider helping us get those numbers finalized. So I know you did a little bit of work there towards the end, so much appreciated there. And I also want to thank our marketing, public relations department with Amber Yoder back there in the middle, and Brad Taphouse doing a little bit of the photography work, and then Katie Finch back there as well. Much appreciated for the efforts to get this on Facebook Live. So for today's presentation, what we want to do is state up front, and this is something that we really need to read at every one of our public events. So statements or comments made at this meeting may be forward-looking statements. Forward-looking statements may include, but are not necessarily limited to, financial projections or other statements of the company's plans, objectives, expectations, or intentions. These matters involve certain risks and uncertainties. The company's actual results may differ significantly from those projected or suggested. We don't normally go into projections, that's not how we operate here, but it is something that we want to put out there, as there is information that we do provide here and comments that are made. So with that being said, the first slide is going over our financial highlights and profitability metrics. We put 3 on this page: the book value, the market value per share, and the dividends per share. Now with the book value per share, that is in blue, and we show you 2018 through 2022. When I gathered the information, what I did is I really rolled it forward from year-end 2017 all the way to 2022. And so what we see here is that our book value, so the equity in the bank, has increased by over 69% since year-end 2017, which was $24.10. So over that last 5 years, that's a solid increase in our book value. The next, well, I'll say the next block over is going to be in green, and that is the market value per share. That's an interesting one that I'll get into a little bit deeper right now. You can see that the year-end 2018 was $32.51, and we have year-end 2022 at $41.47. When we look at that change, we actually see an increase of 27.5% through 2022. Now, that being said, we've seen activity of late, and so I want to put that into a little bit of perspective. We've had recent downward trends in the stock price. We're trading, last time I looked today was $32.55, so I expect that's probably remained the same. So when we look at that change, that's something that the industry in general, and I'm sure most everybody here is a watcher of financial institution stocks, those, whether it's heavily traded, which would be the larger institutions, Citi, Wells Fargo, so on, or more lightly traded like ourselves, we have seen some reduction in stock price. If you look, there's a regional index, which again, some of you may know, called the KRE index. And that looks at regional banks, about 145 over the United States. When we look at that over the last 5 years, or 4 years plus, that is down 21%. From its year-end number, 2018. The bank stock here is actually equal to where it was at the end of 2018. So we've had no reduction over that time frame. Obviously, we've gone up and gone down. If you actually look at year-end numbers, the KRE index has gone down 39% as of the end of April, whereas the stock here, and this is as of really essentially today, is down 21%. Production has been less than that. So some of that, of course, is supported by our good shareholders, and some of it is supported by our actual results. But I did want to mention that when we went into that detail, because it is important for us, because we watch that as much as anybody else does. The final line item is our dividends per share. And our dividends per share, when you look at that, it's actually up over 36% since year-end 2017. We actually dividend out at the end of 2017 is about 96 cents a share. You can see we're up to $1.31 a share, which at this point ends up being roughly 23% of our overall income for 2022. That is down from the highs that we had maybe when we were a lot smaller institution and growing less. But of course, with most of us, again, in this room, we see that banks that are growing at a decent pace need to keep that capital on hand. And so that's what we've been doing of late, is keeping a little bit more capital, but we've still increased that dividend up to the $1.31 a share for 2022. For the next slide, I'm showing our earnings. And our earnings, we really have the blue lines going up, or the blue blocks that are earnings per share. And you can see that that has increased to $5.68 a share at the end of 2022. If you compare that to 2017, which is the previous year, so you show the last 5 years of improvement, we've gone up over 94% in our earnings per share over that time frame. We were at $2.93 at the end of 2017. You can see 406 and 18 and then all the way up. Now there's noise in there, of course, because we did have what's gone on in 20, 21, and 22, pandemic. There was a lot of activity, PPP loans and such. So that noise has certainly impacted all the financial institutions, but you can see that earnings per share has increased. And then you can also note that our actual net earnings have increased, and we're up to 12.207 at the end of 2022. So we've seen an increase on both of those sides. The next area is our return on average tangible common equity. It's something that, again, a lot of you shareholders would look at. It shows the performance of an institution. Now, what we've done here, this is at the bank level, so it's not at the holding company. It's slightly different, but this is the reason we do that is because it's easier to get comparisons to peers. We use the UBIPA report, which is the Uniform Bank Performance Report. And so from here, we put in the bank's numbers in the blue blocks going up, and then we put our peer medians, which is going to be banks 1 billion to 3 billion. And now that we're in that new category, we backdated that and went with that line. And you can see that our performance from a return on average tangible common equity has been relatively consistent there. We have seen some recent increases across the industry. Some of that is due to the PPP income and the fact that in the industry in general, you're seeing a lot of the financial institutions taking some of their earnings through their allowance. And you'll note that our allowance is relatively strong compared to the industry. So we've built that allowance as part of our support of our overall balance sheet. Go on to the next slide. The next slide has net interest margin, cost of funds, and yield on earning assets. So from a net, well actually let me start on yield on earning assets. We'll go top to bottom there. So in red right here we have the yield on earning assets. You can see that has gone down over time. 4.74 was pretty solid back in 2018, and you can see that we were able to tick it up a little in 19, but the whole rate environment that changed in 2020 impacted all of the earning assets, and that's dropped down over that time frame. The next two lines are going to be our performance, our net interest margin, and then the peer net interest margin. So you see in blue our net interest margin. Again, because of course our earning asset yields have gone down, you see our net interest margin has dropped as well. But I want to show you the actual peers, and you can see the peers started out significantly lower, so they dropped, but recently their drop has been a little less precipitous than ours. It actually has gone up a little bit. But again, it's the rate environment. It's what we're seeing here with the loans and what we were getting for loans in 20 and 21. 22 is starting to improve, but we have seen that impact on all financial institutions. And then cost of funds is down bottom. Cost of funds has adjusted a little bit. We've had a little bit of an uptick in 19, and then we saw that drop as, again, the rate environment dropped. And it stayed pretty solid through the end of 22, but we saw a lot of headwinds in 22 in cost of funds. I think when you look across the industry, those headwinds were impacting a lot of institutions as they got to the end of Q4. For us, that impact has been seen more in this current quarter. When we did our 2023 Q1 number, our cost of funds was 1.19. So we've definitely seen an increase. And that, again, these are headwinds that financial institutions across the industry are seeing. And so these cost of funds increases, we work diligently to maintain those. But certainly in Q1, we did see an increase to that 1.19%. And then we do have the yield. Oh, no, I already mentioned the yield on earning assets, so I'll skip by that. Okay. The next slide, and this is an additional slide that I put in here because I think we'd have some questions or comments from internal personnel or any of our shareholders. So we actually had a presentation done by an entity, and they gathered this data from the S&P, which is Standard & Poor Capital IQ. It's something that a lot of people in the industry use. But what it's providing us up here in the top left is the AOCI plus the held to maturity fair value mark after tax divided by the common equity. So we see County National Bank in blue, and then we see our peer average in red. Now, peer average is really 19 banks across Indiana, Ohio, Illinois, and Michigan, and actually Wisconsin as well. There is Wisconsin and Minnesota, so there are 3 in those areas. But they're banks of our size, roughly that $1 billion to $1.5 billion range, and have a lot of similarities. So this is what we used, and you can see that we have the unrealized losses that we have listed for us, and let me get that exact here. So when we look at that number, we're right here at negative 6.4% as a percent of our common equity. And we look at the peer group here, and they are at roughly negative 23.7%. So there's significant impact across the industry. We knew that. And the impact, again, to our peers is a little bit more as a percentage of our common equity. I'll go down and show really a lot of the same information, except it's pre-tax, but it's to our total assets here. Same peer group, and we can see that we have just a little bit of a negative number for us, and I have that at negative 0.7% of our total assets in the unrealized. And again, this is both the AOCI and the held to maturity, which does not get fair value marked in our financials. So this is not something that you would normally see, but we've added that in there. And then we compare that again to the peer average, and you can see the peer average certainly in the first, second, and third quarter of 22 started to improve a little bit in 23, but they have a long way to go. And we've started to also improve, but certainly from a lower level. So it's an important number for everybody. A lot of investors and certainly a lot of our board and our management have been looking at our unrealized, so something I wanted to point out. And then we also talk about the impact, and part of what we've seen in the banking institutions that have had issues recently is their liquidity. So when we look at liquidity, we have a loan to deposit ratio. Again, we're in blue here, and our loan to deposit ratio stayed pretty consistent. It looks like it's changed a lot, but it's really under 100 here, and it was, again, everybody was really low in 22 as cash just came in like a water hose, I suppose, fire hose. And you can see that in the peer average, that same decrease occurred, and they're increased up to in that 77% range, whereas we're at about 84%. Certainly what we want to do is use our deposits to the extent that we can, and so I am really happy with where we are. Wouldn't actually mind seeing us continue to increase that. It really depends on what we have for support, and we have a pretty strong system right now. And I will point out that as part of this, we do not currently have any borrowings with the Federal Reserve Bank or the Federal Home Loan Bank. So all of that liquidity that we use is liquidity that we've generated from our deposit base. And those customers are important to us. It's how we do our business, our communities that we serve. Take that money in, we lend it out. The other piece is the uninsured deposits. So this is something, again, and so this is the average uninsured deposits for U.S. banks greater than $1 billion. And there's multiple different columns here that go through the information. You can see that they have County National at 40%. So compared to the peer average of 15 banks, that is higher than that. When you look at the larger institutions, of course, it's smaller. From us, when we talk about the 40%, we want to put it in some sort of context. So our 40%, that's really where we've maintained over the last decade plus of our activity. It's something that when you're a small community bank, and I'd still consider us relatively small, even though we're over $1 billion. You have a few different clients of yours that are going to have larger deposits, whether it's a municipality or maybe a school that can have some large deposits with us, and really that is impactful to us here. So it's not something that I overly focus on, and certainly when you look at the issues that have been in the industry, you're talking above 90% when you look at the uninsured deposits. That's really where the issues were. So this 40% ratio is actually relatively small when we look at our industry. So that being said, I've gone through, I believe, my slides. So I will quickly open it up to any questions. We will have a Q&A at the end, but if there's anything anyone wants to ask right now before the Q&A, I'd be more than happy to answer. There you go, sir.
All right.
Do we get to shorten the podium anyhow?
Let me back off of that there.
Well, good afternoon, everybody in the audience, everybody on Facebook Live, good afternoon. My name is Joe Williams, President and CEO. I joined the organization as President and CEO on October 10th. It was Columbus Day. Really excited to be here. I'm honored. I'm humbled. When I joined the board back in August of 2020 as a director, never imagined in a million years that I would be standing up here being President and CEO of the organization. I just want to, my comments are going to be completely different than Eric's. I want you guys to get to know me a little bit better, kind of what my vision is for the organization and the team. But I will tell you, it's not about me today. It's about the team at County National Bank. When you look at the great performance that we had last year, I joined in October 10th last year. So when you start looking at the results of the organization a year ago, a lot of credit goes to the board of directors managing through transition. But honestly, a lot of the credit goes to the leadership team that was in place after the transition before we had a full-time CEO. I really want to commend Craig Connor, our chairman, for stepping back into the president and CEO role last year at a really critical time for the organization. And honestly, when you look at everything that happened a year ago, and we put up record earnings, all the credit goes to the management and the associates at County National Bank. So to maybe put my name into the hat for president and CEO, honestly, I asked myself two questions. I went home and talked to my wife. The first question I asked is, why CNB? So I'm a banker my whole life, starting when I was a junior in high school. I've been part of many community banks that at some point in time eventually sold out to larger regional banks. I will tell you from my 40 years of experience in banking, being asked to serve on County National Bank's board of directors is probably one of the highlights of my career, because I know that it's a genuine community bank, and I see what community banks mean to the community, and then I see as mergers and acquisitions take place, I see the impact to the community, but also the associates and the bank itself. So my first question I asked is, why would I want to do this? And I looked at the board of directors, being active with the board for 2 years, seeing the quality that the board gives management. That was a key reason. I've known Craig since the middle 80s. So Craig and I worked together when interest rates were 18%. I've known Craig for a long time. I know his character, I know his integrity, and I know his values. So the first question I answered is why would I want to join is because I know the board and I know Craig Connor and I know their values. I stand up here to say character and integrity really mean something to our board and to Craig. And then the other reason I decided to take the position is the management team. I looked at the existing management team in place and this is first class. These are all community bankers. They all have the same common goal, vision that they want to serve our community, make it a great place to work, great place to live, great place to raise a family, and give impact. So honestly, those were the two things that I looked at when I decided to throw my name in the hat to become president and CEO. So that means integrity means a lot to me, and I know it means a lot to our board, and I know it means a lot to our management team, and I know it means really a lot to our associates. So I'm just going to cover a couple of highlights. So 2022, when we look at the community support, and it kind of goes back to my initial comments about what a community bank means to the community. So when you look at what we did from a support level in 2022, we gave back to the community $582,000 in investment. So we supported a lot of nonprofits, a lot of organizations that are making a positive impact in all three of our markets. So that was a total of $582,000. And I don't say donated, I say invested. Because when we give back to the community, it comes back to us, so it's an investment. And we do get a return on that because people bank with us because of our support to the local community and those organizations as well. And then when you start looking at the individuals of our organization, they certainly give back to the community. There's probably not many boards in all of our markets that somebody from CNB does not serve on at some level. And I would say a lot of them are probably serving in some type of leadership role. And I know this number is higher. I can talk to Amber. Sometimes we don't really do a great job individually of recording our volunteer hours, but I can tell you that 2,000, it's a lot higher than that. But that's a lot of time that we give up ourselves, again, to give back to the community. It's not about us. It's about what are we doing to drive success in our community. So I'm really proud of that. A couple highlights that I want to share. So in 2022, we closed the Wisner Street office. We moved over to the Spring Arbor office here on the left. That's the Spring Arbor Road office. I don't know if you've been there. Beautiful office. Please, if you're ever driving by, and I encourage shareholders, I encourage our management team, anytime you're driving by an office, please stop in. It means something to the associates there when a shareholder or a management committee member or a board of directors stops in and just says, hey, I just wanted to stop in and say hi, say thank you for what you're doing. Anything I can help you with. But if you get a chance, go into that office. Amanda Carpenter's our manager there and just does a phenomenal job there. High energy, really gets her team engaged there. And then when you look over to the right, we did sell a location near Spring Arbor University. Actually, I was with President Brent Ellis last Friday, and he thanked us for the almost contribution for the building. They're getting ready to remodel and do some things with that building. So we relocated right down the street at the end of the strip center. It's our retail location, but we also have enough space where we can put some of our backroom support area. So great location, you can't miss it. A lot of things really happening over at Spring Arbor. So really proud of those two locations. Amy Sherman is the manager there, and she does a phenomenal job. So again, I encourage you to stop by that location and just pop in and say hi. It'll mean something to those folks. Just a couple highlights, and I'm going to touch on a couple things in a little bit more detail as I start thinking about kind of some of the strategic things that we're doing as an organization. But when you look at our commercial loan portfolio increase, and I know Eric touched on some of this, but we had a 15% increase year over year. And again, that really helped drive the record earnings that we had as an organization. And we still continue to see strong pipelines, maybe not quite as strong coming out of the chute that we were a year ago, but we still have a strong pipeline. We still see a lot of demand when we go out and talk to our business clients, but really proud of the commercial group for the 15% year over year increase. Wealth management revenue increase. Again, anytime you can hit double digits in year over year growth in revenue or asset growth, that's pretty impressive. So wealth management, we had 11% increase, and obviously we all know what was going on in the market during the last 18 months. So a big shout out to Christopher Phillips and his team for being able to grow revenue because that goes right to the bottom line for the organization in a pretty turmoil time. And then ACH enrollment, obviously, we're in the digital age, right? We're seeing more and more payments, less paper, more digital, ACH, automatic clearinghouse, those are electronic payments sent through the Fed system. We saw an increase of 13% there, and then Positive Pay enrollment, we saw a huge increase there, 67%. So Positive Pays for our business clients, they send us their checking account, all the checks that they've issued every night, and then when we get the information from the Fed, they match them up to see if there's any fraud activity because we are seeing a lot of fraud activity. So when we start thinking about fraud and the digital world that we're in, one of the prime initiatives that the board and the management team has embarked on is our technology. When you start thinking about the digital world out there, and every day there's something in the news about cyber attacks, they continue to get more and more sophisticated. So our board late last year and management committee said, how are we going to combat, the ever increasing risk of cybersecurity, managing our technology? We looked at our existing platform. We have a great IT team. We can't be the best at technology. We can be the best at community banking, working in our community, working with our clients, doing small business lending, doing ag lending, taking deposits in. But you know what? It's really hard to find IT talent in today's market. And so we said, you know what? If we can't be the best in the world at it, then we probably better look to find a partner that can be the best at it. So management committee did a lot of due diligence, a lot of research. I give Eric Lawson a lot of credit for kind of quarterbacking this endeavor. But we went through an intense analysis. We went through calling different types of companies that do the service. We talked to a lot of banks that have switched to different types of services. And in January, we signed or late December, early January, we signed an agreement. So we are in the process now of migrating all of our servers over to Bank on it out of Oklahoma City. Eric and I visited there, actually got to witness their whole operation, how they handle cyber. I left that meeting, flew back home and said I could sleep better at night knowing that they're watching all of our firewalls and they're watching anybody trying to penetrate our servers and our information. And so the board did its due diligence, management committee did its due diligence, and we signed an agreement first part of the year to migrate all of our servers over to Bank on it. So from January up to this point, we've been meeting monthly with them. They are going to be on site next week for the next 2 weeks and actually onboarding our whole system to their cloud service managed out of Oklahoma City. Great reviews from banks that have switched to them, especially from a cybersecurity standpoint. So that's a huge strategic initiative for our organization. And we're, as we start to see maybe a little bit of a slowdown, that gives us an opportunity to kind of catch up. Because of the phenomenal growth that we've had over the last 5 years, now we need to catch up the back of the house to support more growth going forward. So that's a key initiative that we are in the process of really getting over the finish line. Core values. I started my comments talking about why I decided to put my name in the hat. And core values, that's your organization's, that's your individual's DNA. That's who you are when nobody's looking. And so our leadership team went through a lengthy exercise to say, what do we stand for? Who are we and what are we about? And so we spent a lot of time talking about that, and we came up with these final core values. Actually, I'm really pleased with what we came up with because, honestly, when I look at these values, they align with my personal values. And it really makes the job a lot easier when personal values align with organizational values. And as I look at these, I see a lot of our clients and our shareholders where their values align with these as well. So, when everybody's values align, we've got a pretty good, long, lengthy, committed relationship. So the core values, I'm going to start to the right, transparency. We did an employee engagement survey late last year. Some of the top responses that came back, because we got 250 employees and the bank's grown so fast. So, I give the board a lot of credit and management committee to say, hey, how do we know as we've grown, how do we know, are we hearing the hearts and minds of our employees? How do we know what we're saying at the top of the house? How do we know it's getting filtered throughout the organization? And so we said, it's to the entire organization, and we didn't hide one thing. One of the things that came out with the employee engagement results were the top two things. Technology was third, but the top two things were transparency and communication. And so I take that very seriously as president and CEO that, we're going to communicate throughout the week, the day, whatever our folks need to know, we're going to communicate and keep them in the loop, and we're going to be very transparent with our message. So we are all about transparency to our clients, to our communities, to our shareholders. Transparency is really important to us. Continuous improvement, honestly, we never perfect anything, but we need to be moving forward every day. I've been in this business for 40 plus years and I still don't know it all because things are changing so rapidly. So what we believe is we need to continuously look at anything that we decide, any decision that the management of the board makes is, our first question is, well, how does this impact our clients? Because if it negatively impacts our client, then maybe we want to answer that question differently. But we've always got to look at ways to improve our processes, improve how we communicate, improve our communication internally, improve our communication externally. But we're always looking to be better, and we can be better in this area. I think the one that came as a surprise to some people was empathy. I can tell you from an individual leadership perspective, because I've gone through 360s and leadership academies, really strong leaders. Where leaders usually lack is empathy. And so we wanted to bring it forth and make it a priority. So, we want to be able to step in our associates' shoes. If they're struggling, let's step in their shoes, because maybe it's something that we're not aware of. But let's show some empathy and then figure out how we help them. Or let's meet them where they're at. We have to do the same thing with our clients. If a client comes in and wants us to do a loan, maybe it doesn't fit our box, so let's not say no. Let's say, well, let's see how we can make this work for both of us. So empathy is really important to our management team and our core values going forward. Local decision-making, that honestly comes with the territory with community banking. We need local decision-making. I could probably have all of our senior leaders come up and give you experience after experience of why people chose to bank with us is because we could give them an answer on the spot, and other larger organizations had to go get answers from somewhere else. So local decision-making, and again, that helps us as we are out in the community on a daily basis giving back. And then I think, probably the most important one is accountability. And it's probably going to be the most challenging one, because accountability is a tough word today, not in the world itself, but you know what? We want to hold each other accountable in our organization to make sure that we're taking good care of the client, we're giving the best client experience on planet Earth, that we're taking care of our shareholders, and that we're also taking care of our associates. So we want to be held accountable for that. We want our shareholders to hold us accountable for our deliverance to what we need to deliver to our shareholders. We want our clients to hold us accountable. We want to hold our clients accountable as well. So accountability is really critical. And that's, again, I don't want these just on a sheet of paper. Honestly, I would love to have management committee, board members, shareholders go into any location and sit back and observe, and you see these in action. They're not posted anywhere, but you see them live in action. And so, we're really in a great spot with these core values. My whole desire, especially as shareholders, so I'm a big firm believer in the Gallup Path to Success. If you're familiar with the Gallup Path to Success, it starts with input from employees coming into the organization. You've got to get them in the right seat, and then you've got great leaders. And if you have great leaders, you get engaged employees. And if you get engaged employees, you get engaged clients. We are kicking off a 9-month program for our senior leadership team to go through a 9-month program on how do we become better leaders. Because at CNB, we want more leaders. Because again, if we get more leaders, we get more engaged employees. And if we get more engaged employees, we get more engaged clients, which drives profitability and return. So we take development and leadership development very seriously. So management team, we're going to start that program. It's a 9-month program next week. So I want to spend a little bit of time bragging on somebody here. Lois Howard, I was thinking about this last night. What would I say about Lois? Because I've only known her for a few months. But she's like a rock star. She's like a legend. Like, I drive around town looking for the statue of Lois Howard. So I called a few associates this week. I said, you know what, just give me one simple words of how would you describe Lois? And so I just started writing these down. Loyal was the first person I talked to. Caring, selfless, positive attitude, humble. Friend. Somebody said friend. Commitment, dependable, faithful, thoughtful, community-minded. So that was all the time I had to talk to people, but those were pretty impressive. So if Lois Howard's name was in the dictionary, I bet you'd find all those words under the definition of Lois Howard. And so, today at lunch, I'm driving. I had a Kiwanis meeting in Adrian, so I'm driving. I'm going, what else phenomenal is about Lois that I could talk about? So I'm a big sports geek, love sports. So I started thinking, well, GOAT, G-O-A-T, greatest of all time. I go, you know what? The NFL has Tom Brady. The NHL has Wayne Gretzky. The NBA has Michael Jordan. And underneath it, I got, but really proud of the loyalty and the commitment that Lois has given CNB. The great thing is she is retiring, but the great thing is she's going to help head up we are in the process of creating a Hillsdale Advisory Board. So we have an advisory board in Lenawee, we have an advisory board in Jackson. We said, you know what, we need one in Hillsdale. And so Lois is helping create that and develop that. So we are celebrating Lois on Friday, June 30th as an open house, and from 11 to 3. So Lois, would you stand up so we can all congratulate and thank you for all you do? See, I didn't want to start out by saying Lois is a goat. I had to give a little bit of clarity around that. And then I just want to close at CNB. You know, I'm a big Maya Angelou fan. If you know Maya Angelou, my life quote of how do I try to carry my day every day comes from Maya Angelou. It's, you know, people won't remember what you said, people won't remember what you did, but they're always, always going to remember how you made them feel. And, you know, I feel that at County National Bank. Anytime our employees interact with a client, I think they take that literally. They try to make that happen and live it out every day. We always try to do the right thing. You know, I'm a big believer in doing the right thing. If we make a mistake, let's just own up to it. Let's not sugarcoat it and make excuses. Let's just do the right thing because it makes sleeping at night a lot easier. And I started this too by saying, you know, it was the management team that really, the board and the management team that really carried the heavy pails of water last year in 2022 that created record earnings. So I really want to acknowledge the management committee team. Eric Lawson, our CFO, Chris Clark, who heads up our commercial lending group, Christopher Phillips, who heads up our wealth management, Rachel Emery, who does a great job with our retail and treasury management, Tony Baker and Bob Rozak. They're our key leaders, community partners in Jackson. They are really key for us in that market, and they're great leaders in that market. Amber Kohler, we don't get to see Amber a lot because she's down in the operations area, but she's phenomenal. Becky Wiley, who heads up our HR, and then Lois Howard, the board's leadership, that the results that Eric shared with you today, it's because of those folks and the people that report to them. So let's give them a hand. So I really want to close with this with this slide is because my first day was October 10th. It was a Columbus Day. The bank was closed. We brought all of the associates in the board together for a half a day so I could share my vision. And this is how I started that meeting, and this is how I want to end this meeting. But, you know, at CNB, our people matter. I want everybody in our team to know that they matter. It doesn't matter where they're at in the organization, they matter. I want them to know that they can lead right from where they're at. Again, if we can really get everybody focused on, I can lead from where I'm at, that means if I'm a better leader, then my team gets more engaged, which means clients get more engaged, which means drives profitability. But our people matter because it does start with our people. Our clients matter. You know, we don't exist without our clients. But I think clients come to us and gravitate to us because of our people. So those go hand in hand. And obviously our communities matter. You know, we are a big supporter of every community that we're in. You go talk to anybody in the 3 communities that we're in. You can talk to anybody on the street and they'll say, CNB matters in our community. And then our shareholders matter. You know, our shareholders are really important because I would say most of our shareholders are probably our clients. Really good where we're at with it as an organization. I like the things that we're doing. We have some headwinds with, you know, some of the things that Eric talked about in the marketplace. But I could tell you probably over the last month, Eric and I and Craig and maybe Christopher and Chris, we've been in front of some investment bankers because they like to come and kind of tell us what's going on in the marketplace. Every meeting, every group that's met with us, they said there are a lot of banks out there that wish they looked a lot like you. And so, you know, that gives me a lot of comfort saying we do things the right way and we're going to continue to do the right things the right way. We've been in existence for 89 years. My job as president and CEO is to make sure that it's around and we set the team up for success for the next 89 years. So I wanted to say thank you for your time today. Thank you for your commitment to CNB. I think our associates, our shareholders, our directors, management committee, honestly, at the end of the day, we are all in this together, folks, team. And I think we're top class and really excited to see what we can do in the future. So thank you for joining online. Thank you for being here in person. I guess we'll take a few moments to see if there's any questions from the audience. Anybody have any questions or comments that myself, Craig, or Eric might be able to answer? Jeff?
Joe, I just have one question. I just wondered, with all the turmoil in, the banking industry the last couple months, have we seen a fall off in any assets? I mean, have we seen people take their accounts other places, regional banks, or take their money home to shove it under the mattress, or have we kind of weathered that fairly well?
Oh, I will tell you, so we met with an investment group yesterday. They asked us that same question, and they weren't surprised by our answer. But I will tell you, on that Monday after Silicon Valley Bank, all the news hit, Monday morning I had 3 directors, 3 shareholders in my office saying, "Hey, Joe, how's the bank doing? Are we okay?" And I said, I knew our balance sheet. So we've weathered it very well, as Eric has talked about. We've seen a little slippage in deposits, but it's more seasonality, especially with public fund money, because they take all that tax money in, through the end of the year, and then they start dispersing it about this time. I will tell you, I had a client that Monday morning came in and said, "Joe, I'm glad the management team that you have here is in place. I wanted you to know that I just closed out a $250,000 bank account at Flagstar Bank, and I'm moving it to County National Bank because I know and trust you guys." But we did have a few clients that did call in and ask about FDIC insurance coverage, and we had products and services that we could put them in to make sure that they were 100% protected. So I would say we've weathered it better, and the chart showed that we've weathered it better than most banks. Good question. Other questions? Well, hearing none, I just want to say thank you on behalf of the board of directors, management team, all the staff that's here. Thank you for your support and everything, but great supporter of the bank. But I would say, the one thing that I really enjoy doing is getting out and meeting with people. So anytime you're in the office, anytime you want to meet for lunch or a cup of coffee, I would love to do that. That's the thing I love and enjoy the most, is being out with people. So my door is always available. I'm always open, or call and we can get a cup of coffee or a lunch schedule. I'd love to sit down and chat with you and learn more about you, and you can learn more about me and where we are going as an organization. So thank you, everybody, for being here. I hope you have a great night, and God bless you.